revolution will be live.
Hello, everyone, and welcome to Our Capitalis. Thank you very much for joining us here. And I'm just going to give you a brief introduction to the channel. This channel is mainly used for the average person from every walk of life, just to understand what's going on around you. Because, as we do understand, the vast majority of people do not know how the economic system works, the one we're currently under, that we have been under for like the last 100 years or so. Well, since 1971, when Nixon took off the US dollar off the gold standard, making the US dollar the world reserve currency based on nothing, like with no backup. So there's nothing holding the US dollar's value down to the ground because it used to be gold. So what happened is before 1971 or 1930 something, I believe so, uh, you could uh, you could have a $20 note, and then on the note you could see that it will say redeem for $20 worth of gold. So that's what you could do, but then now you can't really do that anymore. So that's just the whole point of it. It's just like a little example of how much people can gain the knowledge from this, because it's not because people are dumb. It's because people are just misinformed. We're not educated in this, and it's done on purpose. Because imagine if most people knew the economic system and what was going on, because like we would see that okay, we're being cheated outright here. So it's much better for them not to know. Well, it's much better for the powers that be, uh for the masses not to know what's actually going on. So the no, this is jargon, which it actually is. So how it is like basically they'll uh, use different words for the same meaning. For example, a tranche. A trompe is just basically a group of things together, and that's a French word. And when someone's talking about, yeah, I've got a few tranches in my portfolio, and then some of them are good, some of them are bad, you'd be like, huh, tranche what? You know what? It's making my head hurt. Just stop talking. Let's talk about football or boxing or golf or something else. But literally, what they do is they just switch out the words and then just put in more complicated words. It's basically what I used to do in my English exams when I was in school. I used to just use synonyms. So I just find an alternative word and put it in there just to make it look smarter and confuse the person reading material. This is exactly what they do. So what I found out is when I used to explain to people how the economics work. So if someone asks me, oh, why is this happening? For example, Brexit, interest rates, and then I explain to them, and then a few people have given me the idea of, oh, you should do a YouTube channel and some kind of information education thing just to explain to people in simple terms. And then I'm thinking, yeah, you know what, I might as well. So this is what it actually is at the moment. And let me just give you a quick example of what we'll be doing, because I can't really explain what I'm actually doing without actually showing you people, guys. So then now let me just go on. So this is, for example, here I'll be basically looking through the news, through the mainstream media, what they're giving us. And I do know that people say, don't watch the news because it's always lying, don't believe it. And that is totally true. Do not believe 100% what the news says. You could just use it to your advantage. Because you know what? Even though people say, I don't listen to the news, I don't care. But if they read an article from a mainstream media source, they'll believe it subconsciously. So that's what I've realized with people from all different walks of life. It doesn't matter who you are. It's because it's just been programmed into us. So I just use the news to our advantage. So let me explain how I use the news to my advantage. So if I see something on the news, for example, they love Warren Buffett, anything that Warren Buffett says, the vast majority of people will follow. So they'll get Warren Buffett in. They'll like, hey Warren, can you just tell people that it's useless owning gold and tell them to sell their gold? He'll go on TV and say, oh, I don't know why people have gold. You should sell it. It doesn't do anything. It just sits there. sell it, and then put your money in something that will make you actual money. Blah blah blah. In the meantime, he is buying gold and stocking up. And then all the other guys, the smart money, they're all buying gold because they do know gold is not some kind of investment tool. Like, let's say Bitcoin, where you invest like £1 and then you have £100 by the end of the day. It's not like that. Gold is a store of value. So if you earn £100 and you want that £100 to stay £100 in 10 years, you're going to put that £100 and swap it for gold, which is worth £100 at the time. So in 10 years' time, that £100 will still be worth the £100 when you swap it back, but then it'll probably be due to inflation 200 or something like that, because I don't know how fast this inflation is going to climb up. So when you switch back the gold, you had originally bought it for £100 and you switch it back for that same amount of value, it will probably be worth about 200 notes of paper, because that's what it is. It's just paper, which we believe that has got value on it. So gold is just storing your value, so your value will never go down. So if you keep your £100 in your bank account for the next 10 years, they will tell you, yeah, you're getting interest rates, but then you forget about the inflation rates. So your £100 might lose half its value, so you'd be only be worth, like, you'd be buying £50 worth of items with £100 or something, you know. So it's just like that. So it's just these little small moves that these people make all the time. So with this, for example, here I've got interest rates, and I just type it on Google and then go on news. I know Google misinformation, but I just use that to my advantage because millions of people are looking at the same thing and they're thinking the same thing. And the markets are driven by people. It's not algorithms. People are the ones who drive the market. Algorithms are built by people. People know what they're doing because, like, when they say, "Oh, algorithms are doing this," like, what does an algorithm have its mind, like its own mind? Does it choose what to do by itself, or does someone write a program for the algorithm to do? So it's always people driving the markets, and everyone who's in the markets, they've got an agenda. Because me, I personally think that the markets are fake. Like, there's some things in the markets which don't make sense, so you just have to use that to your advantage as well. Because if you think that the markets are totally real in a physical sense, what goes up must come down, then you have lost. It's that plain and simple. And I'm not selling advice or giving advice, financial advice. Please don't sue me. This is just my own opinion that I project out to everyone else, and I just heavily to say to you that go out and do your own research. I'm just giving you the little breadcrumbs, and then you can just follow the trail for yourself. Always follow the money. So Denmark's bank imposes negative interest rates, as you can see on the Financial Times. Yeah, meaning that you're gonna have to pay your bank to keep your money in that bank. You're not gonna earn anything. You'll be actually taking your money out, so you're literally paying the bank. It's like a hidden tax sort. So you just look at these things, and then I just go into detail with them. We'll be going on different sites, and then we'll just be analyzing the mainstream media news because that's why I focus on it, because I know what's going to happen. Well, let me rephrase that. I don't know what's going to happen, but I know how they think, and then I know what kind of message they want to project to the general public, so they can make certain moves, so the powers that be can enter at the right time for themselves, where the smart money is. So that's what they're generally doing. And I've just honed this skill over years of reading all these news articles and then looking, okay, then so that's the game that they're playing. So look at this one here. Top news: IMF warns that currency devaluations will not fix the country's economic problem. That's not a warning. Everyone knows that already. Because once you devalue a currency, what's actually happening is when you're devaluing a currency is the interest rates of that currency or the country, they get cut or something like that, and that increases the money supply. So when that increases the money supply, there's a lot of supply of cash in the system, making the value go down. That only happens when basically the interest rates go down. And when the interest rates go up, it will become expensive to borrow money, increasing the value of the capital. So that's the reason why all these interest rates you see, they're basically zero. 1-2% or something like that. They used to be 20%, But that was when the money was actually backed by gold, so forth and so on. So these are the types of things we'll be looking at. Also, we'll be looking at stocks as well. What are the best stocks to buy? For example, with the 5G coming out, Nokia is going to be a very, very hot stock to buy as the 5G is rolling out. So is Vodafone as well. That's going to be a very big stock to go buy. Then I'll obviously go on to the community of traders. There's different ones. I usually deal in currencies, but I can practically look at anything. Once you can trade one asset class, you can basically trade all because they're all along the same principle. So I use the Chicago Mercantile Exchange, the short format, but then I'll also be going on like agriculture, petroleum, natural gases, and so forth. Just be checking out where the big money is. So here, for example, okay, we've got the Swiss franc here. We know that the non-commercials, which are like businesses who want to hedge just in case the currency goes downside or whatever happens to the currency, they're just hedging. That's what the non-commercials are, just businesses and big organizations. Commercials are people in it for the money, such as banks, hedge funds, some banks, and so forth. As you can see, they practically do the opposite side. That is why the non-commercials hedge against the commercials, doing the opposite thing. So here, as you can see, that the commercial is long there 1,000, but the decrease in the longs and increase in the shorts. So it's practically the same thing here. So I'll go in a lot more detail, but that's what I like to do. I like to follow the numbers, and I like to follow the money because at the end of the day, the only thing that does not lie and has never lied to me are the actual numbers. And some people say, yeah, but someone might change numbers. Exactly, I could see when someone's changed the numbers because these are numbers. Like you can't lie with numbers. If someone tries to doctor in numbers or change numbers, you can clearly see, okay, this is wrong. That's why numbers are my favorite friend because you never lie to me. You see, so like let's say and then this is practically what we'll be doing, looking through the news, and then I'm basically acting as a translator to you guys when these economic people use jargon and all nonsense, and I'm translating for you in simple terms what it actually means, and then with time you will also understand how to read the news. So you say, oh, this guy's just tricking me, so I know what he's saying. It's not going to go down. Let me be a buyer instead. See, things like that. And I'll be concentrating on the Americas, Europe, and Asia as they are the biggest markets in the world. So right now, let me go on to a few charts. Also be doing charting as well. Plus, let me not forget, I will start doing newsletters. So be a minimum of 3 newsletters directly to your email, showing you charts, the explanations, where the money is going, and so forth. Just explaining my own opinion. Once again, this is just my own opinion. You can choose to take it, but I do encourage people to make their own research. I'm just giving you like a little guide of where to look, where I look as well. So, for example, here I was watching this earlier, and I thought this would be a really great example to use. So let's just listen to this guy real quickly, and then we'll dissect what he has to say.
And the Nasdaq both recovering all of Wednesday's losses, and here to look at the next key level to watch, we bring in our friend Stephen Grasso, CNBC Fast Money trader and director of institutional sales with Stuart Frankel. Stevie, how are you?
Hey, Bill. How are you?
What levels are you watching here?
So let's take a look at back on the recent sell-off that we've seen with the overall market, specifically this area right here. So I'm going to talk Fibonacci retracements. Right here, we sell off in the overall market. We bounce back to the 50 and the 618 retracement. I know it sounds a little wonky. It's not that wonky. You retrace half the move that you're moving up. It failed right at that level. This is the problem, is that once it failed, you traded down further from that initial point of failure. What's going on now is the same sort of action here. We've traded down to this level, rallied back, and you wind up hitting that resistance again, specifically in the S&P, 29.25 to 29.50. That's where we are right now. So if we cross over that, it's extremely bullish. Then it opens up back to the levels of 30.27 to break out again to new all-time highs. But it's to a large extent, it all hinges on this level right now. Let's call it 29.50. That's where you want to breach across that, or else this is all for naught, and we're going to wind up trading straight back down again and possibly testing that 200-day moving average at 2,800. So keep in mind, 29.25, we're having a rebound rally. It was an oversold market. Now 29.50 is where you really need to break out before you get sucked back into buying the market. I would not be a buyer here. I'd be a seller right at these levels for the next 25 handles higher. You could always rebuy it higher with all-time new highs being made, but I would wait, sit on your hands if you're a buyer.
Are you getting any volume with any of these moves here?
You know, you have to.
All right, we'll come back and finish this off. So he's basically saying that don't be a buyer right now. I'll be a seller. All right. But let's see quickly with this chart. So this is a chart he's basically looking at, but he's looking at it as a line chart, just like this. That's how he's looking at it. Okay. So now let's just see what the hell he's talking about. Okay, let me just make sure. Yeah. See, can you see that this is the same chart that he's looking at? As you can see there. Alright, so now you can, let's do some analysis with this. This is S&P. So now as you can see here, he's saying, alright then, don't just wait, don't buy now, buy later. So what we're going to do first is we're going to add the moving averages that they have. Okay, they've got 3 of them. They've got 100, they've got 50, 100 and 200. Okay, so let's go 50, 100, and let's go on 200. Okay, these are the ones. So 50, 100, 200. Okay, so what he's basically saying is, alright, let's wait for the market to hit the 200 before you can have a really good solid buy to go up like that, right to around 3,000, or you can actually wait and then until the market reaches up. So you might have a retracement coming back down and then possibly going back up like that. So that is basically what he's saying. So he's saying don't be a buyer just yet, just wait for it. So now I'm telling you where I would buy. So when I'm seeing this kind of structure, all I do is I just look at how it actually is, because what you do have to remember is how the stock market actually works. Why do prices move up and down? Okay, you need buyers and sellers. You need to entice people to go a certain direction for the smart money to go up. Because look at this, 70% of the market is probably these big banks and hedge funds and investment banks, the guys with the big cash, the guys who actually control the market. They can't move the market when there's no orders coming in the opposite way. So if they want to buy, they need sellers to come into the market in order for them to push the price up. If they want to sell, they need buyers to come in the market in order to push the price down, because they truly move the market. All they need is just orders from the retail traders or just the average Joe out on the street. So then, like, let me look at this now, because let's look at candlesticks. Alright, so like, let's look at this now. Yeah, so then this is how I'll see. Okay, I'll say, okay, then here we've got some kind of resistance with a high up there. Then we've got the trend going north. Well, change this into white. Because right, so here's the trend line. That's the trend line, obviously, right there. Then, as you can see here, it did spike out right there. Okay, so what's going on here right now is there are buyers who bought during the spike out right here. They bought right there, and then obviously their threshold would have been at around here in order to get out the market. because they're thinking, oh crap, you know what? This has gone north, and then it's gonna come back down. So then what they're thinking is, okay, then this broke the resistance going north. So then this is a false breakout because it broke the resistance going north. But then look at how it came down. So these are banks pushing the price back down there. So obviously the price pushes back down, and then the people who had bought at this area thinking this is gonna go and create new. Well, it did create new highs, but you know I'm talking about those big new highs. So then it'll break out. The buyers in here would think, okay, then yeah, it's gonna break out. And then once they see these right here, these banks just selling, and then they even gapped here on the sells here, then people are gonna start panicking. They are gonna start getting out. This is like the stop loss of the threshold, anything like that there. Because as you can see here, there's a trend line also going up, and then it crosses the 50 and the 100 moving averages also. So there's three things here. False breakout, three things here which the normal average Joe is thinking right now. So I'm telling the perspective of the normal average Joe, and then I'll tell the perspective of the big boys, the banks and all the powers that be. So the average Joe here bought, and then now it's going back down, crosses over the 50 and the 100 moving, and then it crosses the strong trend as well. As you can see, this large bounce right here crosses a strong trend as well twice, because it crosses and it comes back in. People might still be holding, but then as it comes back out, people are like, you know what, this is now gone. I'm gonna get out of this trade. So as you can see right now, this is what people are thinking right now. So they're thinking, okay, then now it's gonna go down, and then obviously with the political issues going on with the U.S. trade deal, and then Trump with his speeches, so there's a lot of things added on, which looks like, okay, it doesn't look like the market's gonna go up. I'm gonna try and sell for a bit here, maybe until like the 200, then I'll see what's gonna go on there. So why the 200? So like let's see right now. So as you can see right here, this is also some kind of like resistance. No, sorry, support level right there. You see here it's got bounces. Let's change the color to let me change it. Okay, as you can see, it's got bounces right there. It's got another one here, and this one here also. So then, obviously, this area they're looking at it very, and there's some here as well. Then obviously, like this area, they're actually looking at it very closely, because obviously this moving average line will change, so it's not going to just slope up as the price is moving along. This moving average line will probably come into around here. So then obviously that's why they're looking for this bounce, because there's a confluence going on. Right? There's many different factors which are playing a part into this right now. So then, as you can see, this is what they're expecting, the retail traders. So now let me look at it at the bank guys, the big boys, the powers that be, what they're doing. They need orders into the market, because at the end of the day, this market is going to go north. All right. You should just be a buyer. You should just be looking for buyers. Do not sell this market at this moment in time, because this market will go up and it will break new highs. See, because what's going to happen is what happened here. Check this out real quickly. Image again. So obviously it's not perfect. You get what I'm saying, guys? As well, like that. Okay. So right now the powers that be, they want this market to go north, right? So what their plan is, They are the ones who literally move the market up. Yeah, they move the market up and they move the market down. Okay, why do they do this? Why would you move the market up and then try to sell it again, and then you move it past certain points to try and see? Because look at this. This made a whole number, 3,000, turned right there. See there, at that spot there. So just bear in mind that these guys don't do anything by mistake. Everything done by design. Okay. So then they drove the market up, making everyone else think, okay, then this market has broken the previous double top. As it says in every book of investment or trading or whatever, it breaks a double top, but always be careful of the retracements coming back inside or the false breaker. So obviously the false breaker happened, but then if you look closely, I'm going to zoom in probably to an hour. Yeah, and tell you what happened here where the circle. If you look closely, when it broke out here, and then I'm going to go on to the Fibonacci retracement right to there. So then these are the Fibonacci retracement starting here, there. So then obviously the price goes up, comes back down, 32.50 line, and around there, the green zone to buy. Boom, that's where it goes. Or some people, I don't know, they could buy from there. So then it comes 61.8 and then they buy. So then there's more buyers here. Okay. So then people are buying around that here. So like there's people who bought the breakout, but there's a heavy amount of people who are buying at around this moment here, spot here. So there is a lot of buyers at the moment in this spot. So to represent the buyers, I will use so there's buyers here. There's also buyers here as well, and the second touch, and obviously there's buyers here. Because why are the buyers there? Here, at this spot there. The reason why there's buyers there, trend line down. So like this trend line is broken out and then it's retested and it's going up. So there's a ton of buyers going on here. Even here is all these buyers there. So there's tons of buyers going on here. So what happens when there's a lot of buyers? There's a lot of orders in the market to go the opposite way and sell. That's why you can see these heavy drops here, cancelling everyone out who bought from this initial stage right there, because everyone thought, yep, new highs are coming, just past 3,000. Look, 3,000 right there. It just passed 3,000. Okay, it's gonna skyrocket now, and it's gonna skyrocket to the next level. Then no, sales come in. So that's what the bank just done to do over those people who sold in, no, sorry, who bought in this area now. So like now, let me go back to daily. All right then. So now we know that I'm gonna get the upgrade soon as well. I need to get that. It's so annoying. I used to have it, but I don't know what happened. I stopped using Trading View. All right. So then now, obviously, everyone here has been taken out. So now people will think, okay, then it's gonna sell. It's gone down. The moving averages of 50 and 100. It's gonna probably go to the 200 moving average and might go back up, but I'm not sure yet. Here's what's gonna happen. In my eyes, I don't think it will go. Yes, it might go down to the 200. Might. Okay. There's a very good chance of that happening. But right now, what's happening is, look at this. Okay. Everyone who bought here is basically out. Alright. So what people are not doing is come back down below this trend, below the 200. Everyone's selling. People are selling. So people's stop losses and all that, they're all right here. All around this area. Here. They're all around there. All around the area right there. That is where people's stops are. And that is where people are gonna trying to say, okay, this is what I'm going to risk the maximum. So what's going to happen is these banks are going to buy all of these orders because there's plenty of orders going on, and with the trade news going on right now, everyone thinks the market's going to fall. It might fall. I might be wrong, but this is the way I read market. This is how I've made money. This is how I read the market. And please don't take my advice. Just go do your own research. I'm showing you how I do it. Alright? So I just literally trade against people. That's what I mean. So all these guys here, yeah, they're gonna be closed out, and the market's gonna skyrocket. And where the market's going, I don't know yet. But in this time right now, I'm gonna be a buyer. And I'll probably buy here or buy in this spot right there. Unless I see otherwise. Because obviously there's various amount of spots where people can buy. Because even here as well, here's a very good spot right there. So there's a lot of places, because even longer term, now look at this. See, so the price can actually come all the way down there and then skyrocket back up again. So there's different places where you can buy, but then at this current time, I will not be a seller. I will not sell. I will only be looking for buys. And would you say now is a good time to buy? Probably is actually. Probably is a good time to buy right now. And then this is where I see the market going like that. So I'm putting all my bets. You see right there is the buy zone. Yeah. See what I'm saying now, people? So then buy zone. That's the buy zone right there. Alright, put your stops below there or somewhere. But then, yep, this is the buy zone right here. And then don't need to do volume and all that nonsense. You don't need it. All you have to do is just play the game. This is a game, and then this is how it is. So let's just go back to what this guy was saying, and then let's finish off this video.
Remember, when the last 2 weeks of the summer, so you have a lot of people not sitting at their desks,
Right.
The technicals are reinforced by bloated volume, but they don't necessarily need it. They validate it, they confirm the move, but we don't need the volume. We can just get the levels, and it gives us a roadmap to guide our ship or our investment thesis.
All right.
Why do you think we bounce back, Steve? And I asked you this because I'm just trying to figure out if the reason for the bounce back, erasing most of Wednesday's losses, is for real, or if the markets are just simply looking ahead to the possibility of German fiscal stimulus as well as a dovish speech from Powell on Friday.
Right. I think, to your point, markets are fickle. They bounce back because we're in an oversold state. You have, to Bill's point, light liquidity. So you never short a dull market, never fight the Fed. You have two of those things going on in the last 2 weeks of the summer. But I do think it's more of a case of guys are reaching and traders are reaching for safety trades. And you look at what's happening in the 10-year. You look at what's happening in utilities. You look at what's happening in REITs. This is not a high convicted market to go higher from here. I think it's just a rebound effect, just a bounce point.
Steve Grasso. Good to see you, Steve. Thanks.
This is a bounce zone, alright? So this is a bounce zone. Is that all it is? No, it's not. Okay. Alright? This market's going up. That's what I know. And that's where I'll buy it. So this is what we'll be doing. And I'm going to start sending out like emails, newsletters via email explaining this stuff. So I'm going to have this in writing, and I'm going to be explaining the numbers, where the money is coming from, where the money is going, because that's what I do. I simply just follow the money, and then I look at the charts to see where the actual points are, where the big money is, because I can see what the banks are doing, what the investment guys are doing, the powers that be, against us average Joes. So this is basically what we'll be doing here on Our Capitalis, and I hope you guys enjoyed this little session. I know it might seem all over the place, but yeah, I will get better and better at presenting this kind of stuff, putting it in a more professional manner. It's my first video, so just give me some time, guys, and then I promise you I will improve. But the first and foremost thing is to get the information that you all need, where to go on from here. So just for one thing, I forgot to show you. Let me show you like an example of a couple of my trades that I've made. As you can see here, this is the gold US dollar. This was in April. This is actually on my LinkedIn page. So I post all my trades on my LinkedIn, and then post all my forecasts on there. So I've got quite a good following on LinkedIn. I will post up my LinkedIn really soon, depending on how far this page goes. I mean, this YouTube channel goes. So you see. So as you can see right there, look at the gold is skyrocketed. Let me go back. As you can see here, this is where I was a buyer, and this is my take profit. This is my stop loss. So I bought at that level there, and obviously you can't see the levels because it took me out. There we go. See? So I just showed where I bought and then where the stop loss was. It skyrocketed up. Let's go back again. Yeah. See that? And then no, I actually got out of this trade before it reached there. But then obviously let's look at gold now. So this was on around 17 May, well, April. Let's go look at the charts. One quick time. Let's go on gold now. Alright. So I was as you can see I was already doing something gold. Take everything out. As you can see for yourself, it skyrocketed. Oh, that was my MetaTrader. Yeah. As you can see, yeah, I do trade live. This account is just 28 bucks in this account. Oh my god. Yeah. To fill this account again and trade it up and then withdraw again. Where's my history at? Or did they renew the history? Huh. Can't see my withdrawal. Cause I made a withdrawal here. Left me £28. Okay. I'm gonna do like a little test here. I'm gonna grow this account and then show you people how you can grow a little account. It's just like a little side thing, but you see for yourselves. Anyway, here is the gold spot. So as you can see, you can tell from yourself. Oh, this is 11. I thought it was on the hour chart. This was around April times. April. There you can see, gold went up. Didn't go down a single bit. This is where I bought it. That's where it ended up. And here's another one. This is my US dollar. This is the prediction I had made before. US dollar, as you can see right there. Predicted that to touch 12,400, and obviously it's where it went close to there. But then let's check on the chart right now if you actually did touch 12,000. See right now. And yes, it did. Can you see now, people? Look at the market structure itself. Yeah, it touched 4,000, but then I mean 12,400. But look at the market structure. Look at that. You see? So these markets, that like they're not really hard. It's just you have to know what the banks are doing, and the main aim for the banks, like how they move the market, what makes them move the market, who does it, where does the money go. This is how I watch these things. So this is the information I will be telling you guys. So this channel is not about trading and that's it. No. This channel is about economics. So I implement everything. I look at the macro side of everything. So if you are a trader, you can get in on the trades I'm saying. If you're just an investor, you can get in on the investments. Or if you just want to know what the economy is doing, this is like a source of news which will make you understand what they're saying on TV or the papers or anything like that. So I really wish this went well. I know it's my first video. I've made some mistakes, but hey, aren't mistakes beautiful, huh? I love mistakes because the reason for mistakes is that I can learn from them. And obviously, I'll try my hardest and do my best, and I'll release more information as time goes. So thank you very much for watching this video. If you did watch it to the end, and I hope you have a great day and enjoy your profits.
The revolution will be live.